Ainsley, welcome to the State of the Market for end of April, early May.
Yes, thank you, and happy Easter to everybody. Hope they all had a lovely extra long weekend.
Yeah, plenty of eggs and all that sort of stuff. So, yeah,
The sweet stuff.
all the sweet stuff.
Yeah, exactly. All right, well, let's just get right into it. The RBA are meeting in May, so I think it's late May from memory. What are we predicting on our
A crystal ball, isn't it?
We look at a crystal ball.
Yeah, that's right. Yes, don't hold us to this, but yes, with the website that we're looking at on a regular basis from the data, what are we seeing? Like 62% chance of a 0.5% rate drop. That may not happen, but gee, when was the last time we saw a 0.5% rate drop? If it does happen, so that will be substantial. And there's, with what's happening, I guess, with tariffs and what's coming out of America at the moment, that's obviously driving a lot of market uncertainty. And personally, I'd be surprised if the Reserve Bank doesn't do something here. So if that does happen, then for mortgage owners, that should mean repayments come down. And that should also mean for some people who just haven't had enough to get a loan, maybe they will be able to get a loan if the rates do come down in May. So
because that's going to increase their capacity, isn't it?
Correct. Yeah. So it could be significant.
Yeah, for sure. In terms of first home buyers, what are we seeing at the moment? Because, the world is having a bit of an impact here, not only on rates. So what's it doing on our supply?
Yeah. So it's, by the time everyone sees this, we've probably had the federal election. So as we're recording right now, we don't know who the next government will be. But what we are seeing from both major parties is some measures probably to help them get elected, I guess, I would imagine.
Yeah.
But if I'm not as cynical as that, it's trying to help first home buyers. But I'm seeing some measures that I believe could cause price increases just because they're going to help with demand. It's going to bring more people to qualify for some of the federal government schemes.
That's right.
So both sides of politics. So what does that mean? I'd definitely be thinking if someone is keen to buy the first home, they might want to look at it sooner rather than later, because if it does put prices up, then that might be the downside to it. On the supply side, which is coming back to your question as well about the supply, no one seems to have figured out how to get enough supply in quickly. So supply will help, but I think it's going to be the demand side that's going to cause more of the impact, which may end up pushing prices up.
Yeah, especially in the short term.
While
they figure out the supplies.
Yeah.
Okay, so I guess we'll just some insight, I guess, is more the right word on what we've been seeing in the last month, just so people can have an idea of what issues we've come across and solved as a broker. So what about debt consolidation, finding the right lender?
Yeah, we've had quite a few with this recently, and with some clients we've been trying to help them for a while, but it just hasn't quite worked. But even that one rate drop that we've had has helped. And there's also a couple of lenders, and I've got one lender in my mind in particular who's just a bit more generous. So they're a non-bank lender. So they follow some different rules, and sometimes that means there's a higher borrowing capacity. So lender selection and being able to have a wide selection of lenders has definitely helped us in that debt consolidation piece, because with debt consolidation, when people are struggling, we're often trying to find a way to reduce people's repayments. And we've had quite a bit of success with that in the last month.
Yeah. I guess we should probably explain what a non-bank lender is. So I guess it's important to know that if your home loan does not have to be at the same bank that you do all your banking with. So your home loan can be at any bank or non-bank lender, as we're calling them, and your normal day-to-day transaction bank and savings and all that kind of stuff can absolutely stay where it is. It's just getting you the home loan that you need.
Yes. Yep. And I mean, there are plenty of non-bank lenders, but just as an example, I'm just going to mention a few. And if people are following sporting teams, they might even see these logos on the jumpers, right? There's there's a firm called Liberty, another one called Pepper, and there's another one called Athena. So there's some lenders that are, substantial in size, but they're not actually banks. So they're like private businesses, and there are times when they make sense for us to look at those lenders. So
Yeah. We might come back to that maybe next month just to explain it a bit more, I think. In terms of buying properties, some people have been sort of self-assessing that they can't afford to buy an investment property. Thoughts on that?
Yeah. And I guess with all the rate cuts over the last few years, and now we've seen a rate drop and potentially could be a double. It's not, well, technically it might be one rate drop in May, but for us, it's like a double if it's a 0.5%. So what we've been seeing is borrowing capacity is definitely tougher. But if I'm just thinking about a couple of different clients in the last month where it didn't look like it was possible, but it didn't look like it was possible based on their current setup. But there are multiple levers that we can sometimes pull to get the right result. So with some of these clients, it's been reducing credit card limits. Sometimes it's getting rid of the credit card, but sometimes it's just reducing the limit. But not the only option. Closing a car loan or a personal loan or a lease, a car lease. Some of these make a big difference with monthly repayment. So changes borrowing capacity significantly. And in one of these situations, it's a simple matter of, instead of it being a 5-year interest-only period, just turning it into a 3-year interest-only period. So this might all sound like a different language that we're speaking, but I guess the key point is that there are different ways you can structure it to increase borrowing capacity, and that's really helped quite a few of our clients where we've just been able to look at those different options.
We can come back next month and explain a bit more about the non-bank lenders and how that all works. I think that's probably some info people might want. But for now, I think we should leave it there.
I agree. Probably the last comment is there's just a bit more optimism out there with the rate drop we've had and potentially more. So there's a bit of relief, and some people are like, okay, great, I can finally get the extra 30 grand or 40 grand to get the kitchen done, or with people have been putting these things off. Right? So we're definitely seeing some of that. Well, I say smaller stuff, but that smaller stuff, often it means, hey, we need to look at the whole loan and get the right lender and reduce the overall repayments. And so, so it's good. We're able to help a lot of people at the moment, which is great.
Brilliant.
Cool.
Okay.
Thank you, Ains. Until next month.
Until next month, hopefully, fingers crossed, there's a rate reduction we can all talk about.
Sounds great. Thanks, Ains.
Okay. No worries. Bye.